Hi, Travis Slatter from Infinity Business Brokers, the RTO specialists, with a market update for March 2025. If you're in the Australian RTO market, whether you're a buyer looking for opportunities or an owner considering an exit, this update is for you. We have and we are seeing major shifts in compliance, market trends, financial challenges, and buyer sentiment. But it's not all doom and gloom. There are real opportunities for those who know where to look. And in this video, I'm going to go through where are the opportunities, where are the risks, and exactly where the market is as of March 2025. I'm going to break down those risks, break down those opportunities, and what it means for both buyers and sellers in the education industry. So let's first of all look at regulatory changes. ASQA have undergone a major crackdown on RTOs. And as of August 2024, they deregistered 172 RTOs for inactivity and gave 140 RTOs a warning notice to resume training or face deregistration by late 2024. But it's not just the inactivity. As an example, Australian Education and Career College was deregistered in October 2024 for allegedly issuing fraudulent qualifications affecting over 7,300 students. That's just one example where ASQA have taken the hard line with RTOs, and this is only a good thing for the industry. ASQA's 2025 priorities are about targeting non-genuine providers and academic cheating, and ensuring the quality online delivery and industry-relevant training. As all in the industry know, 2025 is some of the biggest changes since 2015 with the introduction of new standards. These standards, which come in July 1, will emphasise a stronger industry engagement, digital literacy training requirements, increased compliance obligations for learning support, and general self-governance. Now, in saying all of these negative parts, there is a push to self-regulation and a reaffirmation that ASQA is indeed a risk-based authority. And this means there will be greater scrutiny on high-risk RTOs and lower scrutiny on low-risk RTOs. RTOs that fail to adapt will expect a sharp decrease in buyer sentiment and in the price that they receive. There's also financial challenges in the RTO sector. First, some stats. The market size is 12.7 billion, and the compounding average growth rate, or CAGR, is 2.7 over 5 years. But the Australian business climate is soured by insolvencies being up 57% in 2023-24, and business closures up from 5.1 to be projected to be 5.6 in 2025. And this has led to increased operational costs, reduced consumer spending, and higher interest rates that are impacting small business. Now, the impact on RTOs is it means there's rising compliance costs, challenges in securing external funding, and higher operational costs affecting profitability. But when we talk about buyer sentiment, it's quite different. As you can see in the graph, the buyer sentiment is increasing. Now, the graph actually is all inquiries to Infinity Business Brokers on a weekly basis since December. And you can see that there is a decent upclimb in the inquiry rate. In fact, inquiry rate has never been stronger in the 8 years that we've been selling RTOs. The regulatory cleanup has boosted buyer confidence in this sector. The due diligence process is stricter. It's taking a little bit longer and it is more complete. And again, this is a good thing. A buyer buys risk, and it's something that I tell my vendors every single week, and that a buyer and a vendor see risk differently. A vendor needs to understand that a buyer will be looking at the financial health, the compliance history, the scalability and digital adaptability of an RTO, as well as the industry sectors it's playing in. The segments of the market that are high interest at the moment are RTOs that are specialising in aged care, trades, technology. Hospitality is always big, and RTOs that have got a mix of short course and long courses. Hybrid RTOs that integrate an online learning model with a face-to-face delivery are also very strong, as are those that are linked to government funding and skill shortage. The interesting thing that not only is the inquiry rate high, but so is the closure rate. In January and February, we at Infinity closed 9 RTO transactions. We've got another 6 slated for March 2025, showing that not only is that inquiry rate at an all-time high, but also the closure rate is high. There are more businesses and actually more people that are looking to acquire RTOs, not only due to the skill shortages in Australia, but the stability of the RTO market and the fact that it always will be an industry of high worth. Strong student demand for vocational courses in healthcare, IT, construction and trades is also increasing the buyer level. However, many smaller RTOs are struggling with the compliance costs and the new regulatory expectations. Sellers are tired after COVID and what they've had to do on top of COVID, as well as the need to make sure that they're ready for the 2025 standards. Here's a little bit about the market trends and predictions. Hybrid RTOs are on the rise and are increasing in popularity. And one of the reasons being is it not only attracts sophisticated and tech-savvy students, but also sophisticated and tech-savvy buyers. RTOs that do have an exposure to government funding need to ensure that that funding is in high skill shortage areas, because that's where the government will continue to fund. And there is a growth potential for RTOs delivering job-ready training and also on-the-job training. When we look at the valuation trends, we're seeing that the range of a multiple is between 2.5 to 4 of normalized EBITDA, excepting for those that have got a non-depreciating asset value and may be considered a shell RTO. Getting into RTO world has never been harder with the government scrutiny and the barriers to entry that are high, which also drives up the price of a shell RTO. Higher valuations are being achieved above 3.5 for those RTOs that are in skill shortage areas that have a mix of fee-for-service and funding, and those that have got a strong compliance track record. Lower valuations are occurring for those that are seen as a compliance risk or have got outdated training models. Here are some big takeaways. Firstly, if you're a seller, make sure your compliance is on point, because it's one of the first things that a buyer will look at. Position your business for growth. Ensure that if you are wanting to sell at a high multiple, that there is a digital capability within your business and that you've got strong industry ties. Plan. Don't think that you're going to sell your business in the first week if you haven't planned for that exit. Make sure you think about the exit strategy that you are happy with. Now, if you're a buyer, be selective. Infinity have got over 40 RTOs for sale, so make sure you buy one that is also future-proofed. Focus on where the government are likely to spend in the future and the areas that are of skill shortage. And when you're doing your deep financial due diligence, also remember that you're not buying the balance sheet. They're always done on a cash-free, debt-free basis with zeroed out liabilities, which mean the vendor has to take on those liabilities and they don't go forward with you. So focus on the P&L more so than the balance sheet. Now, that's the current state of the Australian RTO market in March 2025. Change is happening fast and always does in the RTO sector. And whether you're a buyer or a seller, your next move could be your most important one. As always, if you've got any questions, please drop me a line, send me an email, pick up the phone and we'll have a chat, because we've always wanted our 25 years industry experience to be beneficial for both vendors and purchasers. Have an awesome day, best of luck, and I'll see you soon.